now that you know the difference between stock trading and stock investing and the different kind of traders, now let's touch on what can you trade actually. Yes, I know that you started discussing stock trading, but it's not just stocks that you can trade. There are many other tradable securities that are available to you as a trader. So for this purpose, we are speaking from a technical analysis perspective, whereby you'll be doing price and volume analysis. For you to be able to do that, it means that you need to look at the chart. Well, I know there are some people who call the chart a graph. No hard feelings there. It's a chart. It's not a graph. So for technical analysis, you will need to know how to use the chart, how to plot a chart, how to change the time frame, all those kinds of things. And if you're using indicators, you need to know how to add indicators on the chart, right? So the most common things that people trade, or common thing that people trade, is shares or stocks. That's why we call it stock trading. So you can trade shares, the share price of a company. Like I said, you want to buy a share price at a certain price and sell it at a higher price so that you can make a profit from the share price difference, the price that you sell it from the price that you bought it at. Because of that, thinking is applicable across multiple instruments. So you can do indices, for example, an index of stocks, the S&P 500 or the JSE Top 40. That's an index of stocks. So you can trade the top 40 as it is the index. You can trade S&P 500. You can trade Nasdaq. There is DAX 30, which is in Germany. There is FTSE 100, which is in London. There is Nikkei 225, that is in Japan. There is ASX 200, the Australian index. Like I said, it's in Australia. So you can trade indexes as well, because they also have prices, they have numbers. I want to buy at a certain number and sell at a certain number. If you don't want to trade the index as it is, there is also exchange traded funds, ETFs. We know ETFs, some South Africans love ETFs. We have tax-free savings account that allows us to invest in ETFs. You can invest it in your tax-free savings account. You can buy ETFs in your South African rand portfolio, assuming you are using EasyEquities or whichever broker that you are using. But in this case, we are talking in the context of trading. You can see a trend. If you are trading a trend in an ETF chart, you can see a swing position. If you do swing trading, I doubt that it's possible to trade ETFs in a shorter time frame, as in day trading, because compared to shares, ETFs are less liquid compared to shares. I'm not saying that they are illiquid. I'm saying compared to shares, they are less liquid. For you to be able to trade in a short time frame as a day trade, you want to trade something that is highly liquid. You don't want to find yourself in a position that you can't sell. You don't want to find yourself in a position whereby you're interested in a particular stock, but you can't buy it because nobody's selling it. So the liquidity matters the most. So ETFs are not that liquid compared to individual companies. But then again, yes, you can trade ETFs at least in a long term. You can trade indices, which is an index of a particular exchange or whatever. People, they just create all these kinds of index. Like in the US, you have the Nasdaq Composite, which tracks technology companies. You have S&P 500, which measures all the big companies in S&P 500. You've got the Dow Jones Industrial Composite, which tracks companies that are industrial sector. You've got the Russell 2000, which tracks the small caps. So there are different kinds of indexes. In South Africa, we have the JSE Top 40, the top 40 companies. We have the All Share Index, which tracks all the companies It's 300 plus companies that are listed in the Johannesburg Security Exchange. We've got a property index, retail index, we've got financials, we've got industrials, we have resources, we have high dividend paying companies. All those are kinds of indexes that you can trade on their own. It depends on the broker that you are using. There are some brokers who offer these indexes where you can trade them. But also there are ETFs that tracks these particular indexes. Like if you want to track, if you want to trade the property index and your broker does not allow you or does not have that option, you can buy an ETF that tracks that particular index. You can buy a Citrix 40, Citrix Property or OneVest Property or any of the other ETF issuer that offer you property tracking. Then, so it's individual companies, individual stocks, it's indices, it's ETFs. Then there's something that they call futures markets. Futures markets are similar to index trading, but the reason why they are called futures markets is because they have a delivery date. So usually some of the futures, their delivery date is per quarter. So now you find that you are trading a JSE Top 40 futures that is deliverable, I think end of September. Because if it's deliverable on end of September, it means the next future will start in October and it's deliverable at the end of December 2021. So futures market are similar to index. I think it's the same thing except that you have that delivery date. I know that some brokers will roll over that future so that it roll over to the next delivery date. Like if you are long the top 40 now, you don't close the position before the end of September. Your broker can roll over that futures for you to the next delivery date. Right. So that is what futures are. I think just the key difference between futures and indices trading is the delivery date. Well, it could be the broker or the market makers that come up with those delivery dates, but yeah, that's a futures market. Then we have commodities. You can trade gold, platinum, silver, iron ore, anything that is listed under commodity. I'm not sure if coffee and sugar are listed under commodity, but you can trade the price of coffee, you can trade the price of sugar. We have yellow maize in South Africa, we have white maize, there's a price of wheat. I know that there's a trend in the price of meat, like the carcass. If you slaughter a cattle, there's a certain price that you can pay per kg for cattle, which would be beef, or for lamb, or for goat meat. Yes, we do sell goat meat, especially if you have met farmers from Northwest Province, they are big on meat. I'm from KZN. We usually use goat for traditional ceremonies. We do eat meat for fun. We also use it for traditional ceremonies, but as we know, we don't find goat meat in a lot of butcheries as compared to beef and lamb. Right? So the price of the beef per kg, it does trend. You can trade it. Farmers, they are there in that space. They are trading beef or lamb because it's all about well, I won't call it arbitrage per se, but if you are a beef producer, you want to sell your beef at the highest price, you can go to the futures market and lock in whatever price that you want whilst you are producing the beef in the field. Same thing with a grain production. If you are a yellow maize farmer, you can go to the market, decide if you want to buy or sell a maize contract while the maize is growing in your field. It's another risk management tool for farmers. So there are plenty of things that are tradable. I know that a lot of people are familiar with stock investing, but in a bear market, assuming you are the person that just buys only, you only go in the long direction, you don't short stocks. If there is no action in the stock market, but you want your money to be invested somewhere, Then you can look at other tradable securities. Like I mentioned, we've got commodities, we've got indexes, there's currency pair, what is known as Forex trading. So yeah, on social media, there are people who have no freaking clue what is trading. To them, trading is just Forex. Their thinking is incorrect. You can trade anything. You can trade anything, not just Forex. So yeah, currency pair also falls under securities that you can trade. Because as an investor, if you see that the rand is weakening against the US dollar, you can convert some of your rands, put them in your USD account, and just hold there, or you can use Standard Bank app Shift just to convert some of your rands to the US dollar. And then if the rand continues to weaken against the US dollar, let's say it moves from 15 rand to the dollar to 20 rand to the dollar, you will have made profit if you convert your dollars back to the South African rands. You would have committed something that would be considered as a trade. So there are many things that people can trade, but obviously it would be nice to trade everything. We have a blog, you can check on the description there, whereby we're talking about the importance of specialization. Yeah, well, you can be a jack of all trades. Well, there are some rumors that saying it's not just be a jack of all trade and a master of none. It continues to say other things, but it's important. If you are good at tracking, say, shares, you can just focus on share investing. If you are good at trading indices, you can just focus on indices. If you are good at currency pairs, you can just focus on currency pairs and participate in Forex trading. But like I said, using technical analysis, you can trade all of these things equally. It doesn't matter which market it is or which security it is. And being able to trade all these available securities, it means that you are able to diversify your trading activity. If there's no action in the share market, you go look for action in another market. Well, we trade to make profit, not because we seek action. If you want action and fun, you can go to the casino. There's a lot of action there, but you might not make money. We trade in order to grow our capital. Yeah, that's the whole point, growing our capital. Even if you invest, you want your capital to grow either because of the share price, which would be capital appreciation, or your capital to grow because of the dividends that you are receiving, and perhaps reinvesting those dividends or living off those dividends. We do not participate in the market because we just seek thrill. There are so many things that you can do in life just to go to get that adrenaline shot if you are an adrenaline junkie. So that's it. I think for this series we will cut it here. Maybe in future we may revisit it if there are some changes, but it's a 3-part series for now. In the first series, we just differentiate between stock trading and stock investing. And then in the second part of the series, we talk about the different kinds of traders. We speak about day traders, swing traders, and position traders. And then in this last part, we're talking about all the tradable securities that you can trade. You can trade stocks, you can trade indices, futures markets, you can trade currency pairs, you can trade commodities. So I hope that this 3-part series help you to understand what trading means. Don't listen to the guys on social media who says, no, trading is because it's short term, blah blah blah. No, some of those people, they have never traded in their life. They don't understand the concept of trading, but they feel the need to comment on what is trading. And remember, what another person does on their portfolio, it's none of your business. You can't say that maybe it's wrong to trade or it's wrong to invest, or maybe some people, they will say, no, EasyEquities is an investing platform, it's not a trading platform, blah blah blah. That is just garbage. I mean, whether you're an investor or a trader, you are going to pay tax, you are going to pay trading fees. Yes, by minimizing or reducing the frequency of your activity, you might pay less fees. Or by holding your position for longer than 3 years, SARS can consider it as an investment and charge you capital gain tax. If you hold for less than 3 years, they may consider it as a trading activity and charge you at a certain tax rate. But you cannot sit on a losing position just because you want to avoid SARS triggering all those kinds of taxes that they can trigger. And at the end of the day, you do what fits you. You don't do trading because I speak about trading. You don't do investing because somebody else spoke about investing. You don't day trade because somebody else is doing day trading and they're doing well, or position trading because somebody is doing that, or investing or trading shares. No. You as an individual, you have a responsibility to find what is best for you in terms of how can you invest your money for best possible returns while taking less risk. The people who say trading is risk, I'm gonna tell you, I'm just gonna put it blunt, they're just talking nonsense. They don't know what they're talking about, because with anything in life, there's risk involved, and also the best way to minimize risk is through risk management. So traders and investors, they have lost money in the market, but there are ways that they can minimize their losses. So that's the thing. Maybe we can go to another part for and talk about risk management, but we already have a video. You can see there on the description below, where we're talking about the volatility, the relationship between volatility and risk. We defined risk, we defined volatility, and why risk is inherent. Risk is always going to be there, whether you're an investor or you're a trader, and that volatility is there. There's good volatility, there's bad volatility, but without volatility, you are not going to make money in the market. So that's it. If you enjoyed this 3-part series, please be sure to subscribe, click the like button, share this video with as many people as possible. We will keep on doing a stock analysis using technical analysis. We'll continue to try and grow this channel. So we'll appreciate it if you can just like this video. And if you haven't subscribed to the channel yet, please consider subscribing. Cheers.